Hi and welcome to the Market Alert for Wednesday the 24th of May 2023. So debt ceiling doubts finally weigh on stocks, bonds and gold bid. 30-year Treasury topped 4% and 1-month bills hitting 6% there as bonds got hammered again. US stocks declined amid debt limit impasse, US-China frictions and mixed data. So again, there's still this impasse that's dominating the news at the moment. It'll get sorted. It always does. They always have this big build-up and fanfare beforehand, but the Republicans not agreeing, etc. But in the end, they always acquiesce and they vote it through. Economic news today, 7 a.m. UK CPI. Interestingly enough, it's forecast to be a lot lower. And even Sky News here, cost of living crisis, latest UK inflation to fall to 8.2%. They seem very confident with this number. Expert predict, but they were wrong the last time. So let's wait and see if they are wrong. This will be out at 7 a.m. Right, let's have a look at the downside for the markets yesterday. As I say, the news is that it's the debt impasse that's causing the market to move lower at the moment. But like I say, this is just a normal theatre for raising the debt ceiling. Despite what you're seeing all around saying that they could default and all the rest of it, I very much doubt it. Not the world's greatest nation, as it were, world reserve currency. No, I don't see it happening personally. So let's have a look at the markets. Kick off with the Dow. So in the Dow yesterday, you can see that the market traded down sharply lower there, down to 89, 289s there. We've got this one here at 33.03 and 33.059. Overnight, the market starting to show a bit of support. Upside targets for the UK inflation, just in case it comes out correct or was forecast, then you'll see the markets move to the upside there. In the 30-minute chart, yesterday morning we saw the market trade down to the low, and we saw the market bounce off the low, retest the low, and a bit of a shakeout below the low when the Dow kicked off, and then you can see it trading up to the 50 EMA there and the previous day's close before becoming overbought, and the market then sailing to the downside to the S2. Markets recovered overnight, and you can see at the moment we're above yesterday's close. Got to take out the DP and the 50 EMA on the upside. You could also draw in fib retracements from here to here on the 1 bar for the upside, and you'll see that 78 also ties in with this area here as well. And in the German DAX, a down day. We haven't seen one of these for some time, as you can see from the green in the chart there. So down yesterday to 62% retracement. Was a bit of selling around. Market looking a bit weakish overnight. Got the fibs extended to the downside should prices continue to move lower there. In the 30-minute chart, we started off trying to hold the market, and then the selling came in here, and this was at the low as well. You could see they were desperate to hold it, and then the market traded sideways there, trying to get back above the low, and then had to capitulate, and then eventually once we broke the 200 MA, we see the market trading down to the S3, where 90% of the time the market will find support, and it did, and is moved sideways overnight. But watch yesterday's low. It's looking a bit weakish there at the moment, but a very important low for this morning's trading session. In the 5-minute chart, you'll see how desperate they were to keep the market above the low. This is the low all the way through here. You can see how important it is to have these on the chart. Eventually, as I say, the market gave way. You can see from the attempts to move higher that it was going to struggle. And then eventually, like I say, it capitulates and the market moves to the downside, as can be seen there all the way through to last night, down to the S3. You get down to the S3 and 90+% of the time you'll see the market find support, which we have. But overnight, the market now starting to show a bit more weakness. Is it weakness, or are they just going to retest yesterday's low before 7 a.m. when the DAX futures open and the release of the UK CPI, and then they'll be able to bring the market back, as long as the numbers actually are, well, the at the forecasted figures of 8.2. The actual numbers is what I was looking for. So yeah, bit of selling going on there at the moment, but like I say, it's got other mitigating factors in the background there. This week's trades 180 so far, 4.76, and we've got a win-loss of 71 to 29 there. So far so good. Be interesting to see what happens at 7 a.m. The markets have been sideways, so not bad at all, and then eventually they broke yesterday afternoon after I'd left the desk, as prices then moved down to the S3, so I missed the best trade of the day, as it were. Okay, let's have a look at the S&P. And in the S&P, you can see the market trading down to 62 and the 20 bar moving average in the daily charts. I've marked up the upside there just in case we get a bit of a bounce. We've also got the further extensions to the downside that take you to 89 to that 50 EMA as well. In the 30-minute chart, we were on the skids from the start in the S&P. We tried to get back above the DP, but we found resistance at the underside of this down to the 200 MA and the low. And again, you can see how the market tried to hold at this level, but eventually gave way, and then the market trading down sharply. Not quite getting to the S3 on this one. Or did it? Oh, it did. It got to the S3. It's just hidden by that BRN. I thought it should do, because the distance between these is normally the same. So yeah, it did get down to it, and again, see the market sideways there at the moment. And if we just expand this out a bit and have a look and see, so we've got the low here, and we could come back 89% of this move, which will bring us around to this level anyway. So keep an eye on that. In the FTSE 100, also down, stuck in a sideways range still. Obviously waiting for the inflation numbers this morning. These are the downside shakeout numbers. Should the market shake out to the downside before moving back to the upside if it is 8.2. And then here you've got the market finding support at the S1 yesterday morning and the BRN, and also, guess what, the low. See the buying coming in, huge buying there, bring the market up when everybody thinks it's going to sell off. Eventually it does. As the market comes back through the high, the R1, the close, the DP, that becomes a resistance. So the 200 MA becomes support. But again, eventually with the down moving lower, prices trade down just above the S3 for the FTSE 100. We're already at yesterday's low, which is interesting as well. So it'll be interesting to see if the market will actually hold at this level when the inflation numbers are released. And in the currencies, GBP, JPY, a bit of a supply around in this market yesterday, a bit of a sideways move. Up on the overnight though. In the 30-minute chart, you can see there yesterday the market trading down to the S1. Again, you've got that retracement there. Market up. Again, you've got a retracement from there, back up to there to the close. When the market then pulls back, we're stuck in the sideways range, very similar to the GBP JPY that we've just looked at. US dollar down on the overnight slightly, but up during yesterday once more. The market's still holding on these levels at the prospect of the US defaulting on its debt. Like I say, it's not going to, and once that's sorted, then you'll see the dollar index move back to the downside. Finally, in the metals, silver was crushed in the morning, but brought back in the afternoon and evening. Trading down to 23.6. Actually, traded down to 23, didn't it? Let's just have a look at the low. 23.09 is where it went. So let's have a look at the 30-minute just to get an idea. To bring that up, yeah, there's $23 there. So they brought it back. It's at the S3. Again, 90+% of the time they'll bring it back off the S3, which it did. Came all the way back up to the low of Monday. And then we've been trading in a sideways range and managing to get back above the DP. It'll be interesting to see how the market reacts to those inflation numbers from the UK at 7 a.m. Gold also stuck in a sideways range. We came back 78.89. Is this the shakeout and retracement complete for the gold market? Who knows? But on the upside, from here to here is where the first retracement or swing was left. So there's the upside targets. Again, you can see that we've got 78 tied in with the 20 bar moving average, and the 50% tied in with the 50 EMA there as well. 30-minute chart holding a lot stronger than silver did yesterday, and you can see moving back to the upside and also trading at yesterday's high as well. And finally, gold-silver ratio continuing to move to the upside. As I mentioned a couple of weeks ago, this is how it works. You can see silver's weaker than gold purely by looking at the gold-silver ratio there, as would you would expect, and as has been for the last 30 odd years that I've been trading this market. Okay, that will do it for this one. Let's see what these numbers are at 7 a.m. and how the market reacts to them. And with that, as ever, thanks for watching. See you in the next one.